1/3/22, first day of the new year trading. How about that? S&P 500 is the daily chart, and we've come right back up and testing resistance right there. And so it was a remarkable day. After 30 some years of trading, the January opening bell it's always been a tradition to try to go higher. Sometimes there's a gap and a big sell off. This time it was making new highs. New Year is over. Happy New Year once again. And we start the tape with major resistances approaching. We have earnings. We have a lot of stuff on the table. The index on the S&P right now, when we continue that trade in 2021, we had 70 new highs on the S&P, and we traded them all the way up throughout the whole year. Now we're starting out with the high, but I will tell you that market volatility is coming. It's going to make your head spin. It's going to spin fast. And either we break out and we get extremely overbought, and then we'll see what will happen. It's day one, and it's the afterburner of 21. 22 is now here. So I will caution you right now up here at resistance. We're overbought, and it can get a little bit more overbought. Now, I have seen a lot of January, called the January effect, and you get a good couple of days up, and then all of a sudden that volatility is going to kick in, and when it does, it's going to be hard, it's going to be fast, and prices will be moving rapidly. And we talked about two kinds of volatility: upside volatility to get overbought, and downside volatility to get oversold. So when the volatility returns in January of 22, we're here now, and it will. And it will get big, and it will run fast. It'll move fast in that S&P. We have earnings season on board. I just want to make sure that the yellow flag is out there with everyone on this S&P 500 for 2022. Not only that, in that S&P 500, you're heavily weighted with Apple, Google, Netflix, Amazon, and all the really big tech. And 2022, my analysis for big tech is going to be the laggard. And when those things correct, then this S&P 500 index is going to torpedo, and you'll see a big correction when tech will have its correction here in 22. Market volatility, we're closing out up toward the major highs on the S&P, ended up 29.76 or 0.62%, everyone. Last print was 47.95. That means we're closing up toward the highs. Now, when we break out, what we're looking for on a breakout tomorrow would be 2 or 3 times volume to the big side of the breakout. Not I come up and hit resistance. No, you have to have volume and breakout so that we could get confirmation that the buyers are still going to be in the opening second day tomorrow of 2022. Sign up for the free 5-day trial. You're going to enjoy it, you're going to need it, and you're going to learn more than what you ever dreamed you could learn when it comes to this business and what this business will bring in 2022. Once again, I'm going to conclude that the buy signal is diminishing, not going up. So when you have an up day, you want to see that technical indicator making higher highs and whatnot. So it did not. And the reason why it did not was because the volume was lagging. This is the reason why it didn't. Once again, if you're serious about trading, we have ETFs, We have Bitcoin, and we have breakout trading, how to short stocks. We have all kinds of services, many of them. And we have lots of free live events just for people that are serious like you. And we're going to take you to a level that you're going to enjoy. And you'll enjoy that level because you'll be an active trader. And you will go through your walk with the daily market every day, called price action, volume and price. That's all we care about. Headlines don't mean nothing. Algorithms don't mean nothing. All it means is which way the prices are going. And I have seen in my life where what looks good could turn out to be a nightmare. And volatility is on its way in the S&P and the tech sector in 2022. Whether it's tomorrow or next week, no one will escape it. No one. Be ready because you're going to need it.